Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 21st COT report of 2016, and as usual we're going to start off with the changes in commercials positions, so here we go. As you can see, we've got Nasdaq on top of our list with a 35% change in commercials position. You may see a 38% change in large speculators. Of course, these changes are definitely much larger than average, and of course can be considered bearish COT change signals. So possibly affecting prices in the near term in the next couple of days, early next week. Let's have a look at the 5-year chart and see how extreme the Nasdaq is at the moment. And you can see that we're moving away from a bullish COT extreme that was present in the market. We had a few bullish extremes in the past. You may see these as I'm showing to you. And of course, we've got bearish extremes as well that you can see as I'm pointing out to you on the chart right now. That's Nasdaq right now. Actually, at the moment, I would say that this bullish COT extreme, as you may see, is of course the one that is in place, and to really reach a significant bearish extreme, you may see what levels we need to reach. Moving on to cocoa market, where we have a 33% change in commercials positions. You can see the change size over here. Here we can talk about a bullish COT change signal pushing prices higher possibly in the next couple of days. Opening a 5-year chart, let's have a look at the extreme situation. You can see that we are more or less in between the two extremes that can be seen on this 5-year chart right now. The last extreme that we had, a relatively larger extreme, was a bearish one. Not that large, but as you can see, it did coincide with a top in the market. Then we had an even greater extreme that signaled the top. As you can see, in the past 5 years, the top in cocoa was coinciding with this extreme. So it's really the change signal right now that can be a signal to act on. The extreme isn't that obvious right now. Moving on to lean hogs, where we have a 26% change in commercials positions. You can see the change size over here, and of course you may also see that we have had a bit of a rise in prices in the past couple of days. So this signal may have came a little bit late, but nevertheless it can of course be counted in when you're gonna consider this trade. 5-year chart would give us a more better picture about the extreme, and as you can see, again, we're more or less in between the two extremes, the bullish and the bearish COT extreme levels. The last major extremes were actually bullish ones, of course not surprisingly, coming at market lows, and now we see more of a significant rise in lean hogs prices. And of course, as we see this rise, we can also see that we're moving away from those bullish extreme levels. We're pretty far away from the bearish extreme levels, as you can see on the chart here. So this only tells us that the rally that has started may easily continue in the next couple of weeks, month. Moving on to large speculators COT extreme, we've got rough rice on top of our list with the 102 report extreme. Let's open rough rice and see that extreme on a 5-year chart. Here we go, and you can see clearly that large speculators have gone above the zero line. They're net long right now, and you can see what that meant in the past when large speculators were at such extreme levels. Of course, you can see at the beginning of this 5 years period we had an even greater extreme, and that actually came a little bit early. As you can see, we had an even greater bearish extreme. Sorry, we even have a greater top in the market before we saw prices move downwards. So anyhow, the last extreme that we had in rough rice was a bearish one, as you can see here. Then we moved away from that stress level, and as we moved away, prices gone down again. Now we see prices rising. And of course, the question is how long it can rise. Well, as you can see, last week or this week we had a significant decline in rough rice prices, meaning this may have been a top. Of course, if it was, then most probably we're going to see the extreme go towards the other side. I mean, large speculators may go back down into net short territories, and commercials go back to net long territories. So that you can see the rhythm basically on the chart here. Let's move on and have a look at the Dow Jones, where we have a 78 report extreme. Not that big of an extreme, but well, that's the next in line. So it's here it is. You can see here we have more of a bearish extreme that we can talk about. Not that extreme. We have had larger extremes in the past on this 5-year chart. It's pretty visible. But that's the extreme right now in Dow Jones. And then the S&P 500 with a 71 report extreme. Here we go. You can see the extreme on this chart. And it's pretty clearly visible that the extreme that we had at these levels that signaled this top, we've reached an even greater extreme right now. So I would say that the picture in this case is more bearish than it was back here. But of course, if you look at the 5-year chart, you can see that there's quite some space left to really reach those significantly large extreme levels in this market. That would be obviously a short opportunity. It's not that obvious at the moment, but nevertheless, I'd say it's more of a bearish picture than bullish, that's for sure. Of course, this rally, if it continues, we most probably going to see the rise of this extreme. The stress levels would become even greater. And as you can see, there's still space left for that to happen. So it's not an easy picture right now. So that was S&P 500, and it was the last market for the review that we've analyzed. Of course, don't forget you can have a look at other COT charts at cotbase.com. All markets are available, and of course you can do a more in-depth and detailed COT analysis if you wish. So I hope you enjoyed this review, and I hope to see you next week. Have a great week and take care. Goodbye.